This is the MTPredictor weekly update for August 12th. All right, we're following the S&P mini again. Here's the weekly chart. If you've been following this for a while, you know that we came into that wave 4 support here. I projected wave 5. That's this shaded area here. I'll just project it up here using the tools in the software. Okay, so we hit our minimum wave 5 target. Again, I gave you that ahead of time several weeks ago. I'm going to take a decision point off of the wave 3 swing here because this is, again, we're still in this kind of critical area for the market. All right, we haven't taken out this wave 3 swing. We're in minimum wave 5, but the wave 5 minimum target here is inside the wave 3 high here. Market needs to take this area out. It's got the pattern is right to take it out, but the volume, if you've been tracking, has been so light, and you know, maybe it's the high frequency trading programs after the night debacle there. You know, I got an email from Night because I have some money that they you know, clear, and you know, saying that don't worry, we're okay. But you know, when you get one of those emails, it kind of, you know, scares you after what's happened with PFG and so forth. And subsequent to that, I've been hearing that there may be lawsuits involved and stuff, so they may be on shaky ground still yet here. So if you do have funds with those, you know, be aware of that. That may be something that you want to look into, lightening your account size there, at least. So anyway, that may be why the volume is that shakeup. Maybe some of the reason why that volume has been so anemic. Maybe some of those automated programs are kind of slowed. Anyway, you know, we'll see. They got to take this swing out here. If they don't, again, we talked about that. You know, we've kind of gone beyond the wave 2 or B. That's why I said the pattern is it looks like we should continue higher, maybe get into this decision point resistance level around 1435. But with the volume the way it is, you know, we just don't know here. So be aware, even though we've kind of exceeded wave 2 or B, it means we should go to the next resistance area. But with the volume, you know, we'll just have to see how that plays out. So not quite out of the woods yet. Normally I would say, yeah, expect that next target with that 1433 area anyway. But you know, we'll see. Let's kind of go around the horn here. I'm not going to spend a ton of time because a lot of these things are in the same kind of position holding patterns. It's actually the 6E, which is the future on the euro. This is the weekly chart. You have that 5-wave pattern down in the typical wave 5. So you could get a rally in the well, it's a week. Let's just go down to the daily, because here's the daily. Same, you know, basic pattern with 5 waves down into typical wave 5 support. The tendency is you'll get a rally back to this area above 2800, which is it's about 2845 is that next level. We do have, if we go to the weekly chart, this swing back here, which is a significant swing. If I take a DP, you see where that major support is. I don't know how far they're going to go with this rally in the euro. I'm thinking that they're going to roll over at some point, and they're going to find this area. We'll see. And the reason I say that is because, you know, I've been looking at the dollar index, and here's the target on the dollar index. Get rid of that. And so, you know, we're pulling back here as the euro has rallied a bit, but I think eventually this thing is going to swing back to the upside and get to this 85.20 area. So we'll see if the the bottom could be in the euro, at least for a correction back to the wave 4 DP. I'm not going to hold my breath on that one. Let's take a look at oil. Again, this is the weekly. You kind of had your double, almost triple bottom there, and it's rallied off of that. This is you're in a little, not quite reached that wave 2B, so maybe it's a little more upside before you get some more resistance there. And then on the daily chart, there's a short signal. There, the entry would be 92.81 with a stop at 94.73. If it opens and never gets to 92.81, obviously it's not an executable trade, but you see the target there, 85.86. There's no real good pattern here other than the signal. It's just an ABC pattern. We're not even the minimum wave C target yet, so it is with the trend, but so it's a correction to this downtrend here, but I'm not putting a lot of weight on this one anyway. And then let's take a look at gold. Let's look at that was a daily signal here in gold that was short. Hit the 100% initial risk line and a stop at break even there. So that one's finished. But I want to look at the weekly chart really, because again, here's your weekly 200 period, and they formed this little talked about this little flag or pennant, and we're just waiting to see which way this thing breaks. If we get a close above this area, a nice clean close above it, and then the high gets taken out, then we should get a leg up. If they close below this area and that low gets taken out, then we're probably going to see the next support level down in here at least, which is around 1497 area. Okay, the next kind of major resistance would be all the way up. It's 1835. So again, we'll see. And silver is the same thing. It's waiting on gold basically. It's found that support that gold is in, and we'll see which way it squeezes one way or the other here. If it does get a squeeze to the downside around that $24 area, would be some support, because that's just that weekly 200 period in silver. But we did talk about this being a high here. This could be wave 1 into wave 2, and wave 3, if we project that down, would come in around $15. So it'd be down here. So watch that. If this gives way, then we may be heading that wave 3 target to the downside around 15. It's probably about 1525 in silver, which would mean that gold would probably be heading down to its weekly 200 period. And so, and it can do that, and still the bullish case is still intact. If I go back to gold here, as we see back, like not enough data on this chart. Let's just do the continuous contract here and add some data to this chart, just so you can see what I'm talking about. Alright, so going all the way back, let's just look back. Basically when it started after 9/11, the bull market in gold, and here's the weekly 200 period. All these nice buy signals that were above the weekly 200 period and just below the weekly 50 period. All right, some nice ones here. All right, this was the crash of '08. Now the stock market crash of '08. You see this sold, got a nice buy signal right around the weekly 200 period. So we could see that type of thing. If this breaks down, we could see that weekly 200 period, and then you can see that the bull market would still be intact. It'd be just a nice buying opportunity, in my humble opinion, anyway, for long-term position stuff, 2 to 10 years anyway, is what we're talking there. Not talking day trading stuff. All right, we'll leave it there. We'll see. We still have to, get some volume back in this market and see if we get the indexes, the S&P and the Dow and the NQ, another push up if they can do it, and then we'll be looking at potential, maybe the market taking a breather, maybe consolidating a bit, maybe even correction. So we'll see. We'll come back, take a peek next week, and see where we're at. All right, have a good trading week, all.